Hello, everybody. Welcome back to the TF podcast. I got a very special guest today, Pierre Rochard, one of the leading voices and educators in the Bitcoin space. I'm super excited to talk with him, just not only from his Bitcoin knowledge, but just overall market knowledge and really what's going on. So with that, Pierre, I interviewed Peter the other day. I apologize. I love if you
You
can.
can call me Pedro too.
Pedro. Pierre, yeah, if you wouldn't mind introducing yourself.
Yeah, sure. So I'm the Bitcoin strategist at Kraken. It's one of the leading global exchanges, and I've been researching Bitcoin for quite some time now and writing a lot about it. My background before Bitcoin was really Austrian economics. I was very interested in sound money and 100% reserve banking. So that's why I found Bitcoin to be so interesting when I started digging into it. And now, since then, I've branched out into more software development, and so I enjoy that aspect of it as well.
Yeah, and do you have a software development background as well, like on a personal note, or
I'm entirely self-taught
yeah?
because I got a master in accounting and started learning how to code after that. So if folks out there are interested, I highly encourage them to not let their schooling interfere with their education. So even if you didn't get a computer science degree, you can still learn how to code and get up to speed pretty quickly if you dedicate time to it.
Yeah, definitely. There's so many tools out there nowadays that you can learn, and even in just different phases. Awesome. Well, yeah. Hey, I really appreciate you being on the show. I'm super excited to just kind of dive right into all the wild and crazy things that have been happening in the global in the world, right? So, of course, I'd love to start out with just Bitcoin overall. One of the things you're definitely a big proponent when you talk about stock to flow and haven asset type stuff. So I'd love if you could kind of just clarify that for folks. When you say when you talk about stock to flow or Bitcoin being a stock to flow safe haven, I'd love if you kind of just touch on exactly what that means for myself even.
Yeah, sure. So the concept of stock to flow was popularized by Saifedean Ammous in his book, The Bitcoin Standard. And then what happened is that he popularized it from kind of a qualitative perspective of connecting it to sound money and to Austrian economics. And basically, the idea is that you have the stock, which is kind of the total existing above ground supply of gold or already mined amount of Bitcoin. And then you have the flow, which is new gold being mined or new Bitcoin being mined. And you look at this ratio over time, and Bitcoin's ratio is actually improving because Bitcoin has a predetermined supply algorithm where basically when Bitcoin first came out, it was issuing 50 Bitcoin every 10 minutes on average. And so Bitcoin started out with a very low stock to flow ratio. So if you think about the second block, the stock was 50 Bitcoin from the first block, and then the flow was 50 Bitcoin from the second block. And
Got it.
so the stock to flow ratio was 1. And then when the second block came out, now the stock to flow ratio, when the third block came out, the stock to flow ratio went to 3. So the higher the stock to flow ratio, the bigger the outstanding number of Bitcoin is relative to new Bitcoin being created. And so the reason this matters is because in Bitcoin, but also in gold mining, there's a cost associated with mining, with the issuance of the new units. And so in Bitcoin, that's a combination of factors. There's the costs of the mining hardware. So in the early days, you could actually mine using a normal generic computer on your desktop or on your laptop,
Right.
and you could find blocks that way. so that's one of the costs is the hardware, and then the hardware has to be combined with electricity. Obviously, you got to have electricity to run this hardware, um, and so those are the two kind of big costs. Now there are additional costs that people don't really think about, and this is actually fairly common in economics, where people don't think about other costs other than the most visible ones. Um, and in the literature, this is called transaction costs. Now, people kind of there's not transaction cost is a technical term in economics,
Hmm.
and what's included in transaction costs are things like information costs. So the how much effort would someone have to put into learning how to mine, right?
Right, right,
Um, and so that's a real cost, and people just gloss over it. But so there's a lot of additional costs where you have to. So, there's search cost. So the search cost is, you know, you would have had to be trawling the internet to happen upon Satoshi's email in the crypto mailing list and
right,
be able to then like dig into it and ultimately start mining. That was an extraordinarily high cost to pay, and obviously people did, and there are people who spent decades as cypherpunks, learning about or trying to create digital cash before the Satoshi white paper came out on the mailing list, and so they paid a very high cost to be the first people to learn about Bitcoin. So it's
totally.
not like they got lucky and they got free money or anything like that.
Right,
That's kind
right.
of a myth, and it's a myth propounded by skeptics. But in any case, so there's a cost associated with mining, and obviously that's true of gold as well, right? You've got to have big big trucks and or maybe in the early days you could just go gold panning, right? You
Yeah,
could go find a stream out west, uh, and then that highlights the costs there as well of
yeah,
searching. You had to literally cross the United States, Lewis and Clark style, which
totally.
the risk of death was non-zero.
Yeah,
um,
yeah,
in any case, the this contrast this with a lot of other currencies, like government currencies, where there's basically no cost to them creating more. So the stock to flow for the U.S. dollars, actually that doesn't matter because there's no cost to the flow. In fact, the Federal Reserve, has emphasized that they can create as much USD as they want, and they
right.
can do that with a keystroke. So it's not really a relevant metric for those currencies.
Yeah, as we're seeing right
So
now, right? So totally.
yeah, exactly. It's completely arbitrary, and then they can airdrop that new money onto anyone. And we actually we see this in cryptocurrencies as well. There's cryptocurrencies where it doesn't really cost anything for the issuer to create more cryptocurrency. It's just kind of arbitrary ledger entries for them.
Yeah,
And so the so as the stock to flow ratio is increasing, the relative scarcity of that asset is also increasing, and the ratio between uh, people who have costs, right? So miners, for example, have to go sell their Bitcoin because they need to pay their electricity bill. Even if they pay it in Bitcoin, right? They're still selling Bitcoin in return for terawatts or whatever it is.
right, right.
And so then you could say, well, the electricity company, they got to sell their Bitcoin, yada yada, up the value stream there. Um, and so this actually represents a stubborn outflow of value from the Bitcoin system. And then you have on the demand side an inflow. And so that inflow is really, it's driven by Bitcoin's fundamentals, right? So what are Bitcoin's fundamentals? Being permissionless, being censorship resistant, being seizure resistant, and it's sound monetary policy. And this is where we kind of get into a reflexive feedback loop between the supply side of what we were just talking about with stock to flow, and then the demand side where people are actually interested in acquiring a currency with a higher stock to flow ratio.
Hmm.
And so this creates kind of a feedback loop within the Bitcoin system where Bitcoin's increasing stock to flow ratio actually attracts an increasing number of people interested in holding the unit. Um, and so that's kind of what we've seen over the past 10 years. And there's quantitative analysis that actually backs this up. There's an analyst called Plan B who was
Hmm.
able to find that there's an actual strong relationship between Bitcoin's price and Bitcoin's stock to flow ratio, which is unlike any other relationship. So, for example, you don't see the same kind of relationship between time and Bitcoin's price, which would
Right.
kind of indicate that there's something special going on there. So that's kind of why stock to flow is interesting from a qualitative and quantitative perspective. Now, on the issue of safe haven asset, I think
Yeah. Yeah.
that there's a lot of confusion about this because a lot of people are only used to thinking of money in a debt-based system, and that that kind of money actually behaves very differently than money in a savings-based system like Bitcoin. There's actually very little debt built on top of Bitcoin versus debt built on top of the dollar, for example. And so uh, normally when you have a real economic crisis, so for example when you have a pandemic
Hmm.
and people need to acquire real resources, so in this case masks, ventilators, uh, food,
Yeah.
toilet paper, um, they need to sell their money, right? They need to uh, they need to go spend their money, which means that they're selling their money for real goods and services. Um, and so in that context, all else equal, you would actually expect the purchasing power of the money to decrease because there is an increase in competition for real goods and services. And so people call this price gouging, but
Yeah.
really it's just a free market operating, right? And so you would expect a decrease in purchasing power of the money, so you would expect inflation as people are trying to trade their money for toilet paper.
Yeah. When
Um,
you're saying, so I'm sorry to interrupt, but when you're saying
yeah,
selling money, I've never heard someone say that, but when you put it in that framework, it makes total sense as to why that could cause, inflation in the aggregate, right? Like it's a
yeah.
really interesting way to put it.
And so that's kind of that's in a real economic crisis. Now, by real I mean that it's actually affecting the real economy
Hmm.
versus a financial panic, a financial economic crisis, and that's actually a completely different beast where you have people trying to buy money. They're not selling money; they're trying to buy money. Why are they trying to buy money? Because their balance sheet is actually filled with dollar denominated liabilities, and so they need to buy money in order to pay off liabilities that are dollar denominated.
Hmm.
And so this is just a classic financial panic where the safe haven asset uh, is actually going to increase in value, and so you're going to have deflation. Now, in the context of our current financial system, it's not just uh, the money, U.S. dollars, that is in high demand. It's also all of the assets that are dollar denominated and guaranteed by the dollar issuer.
Mm.
Because if you have an asset that is guaranteed by the dollar issuer, that means that you can trade that asset for dollars on demand. And so, for example, US Treasuries become a safe haven asset in this context because someone who holds US Treasuries knows that they can go to the Federal Reserve and trade those US Treasuries for new dollars. And those dollars can actually go settle any other liability. And so that's why in a crisis, in a financial panic, the money is actually a safe haven asset in the sense that you're going to expect its value to increase. You're going to
Got
have
it.
deflation.
Yeah.
Whereas in a real economy crisis, you actually expect inflation in the money, and the money is not a safe haven asset. The safe haven asset is the toilet paper, right? And that's what's increasing in value. Um, and in the present context, you have both of these competing against each other, right? And because we have two simultaneous panics. We have the real economy crisis, and we have the financial panic going on at the same time. And so that's why we see these high volatility, right? Because
Yeah.
we have this strong tension in the system, and we don't know at any given point which feedback loop is kicking into gear.
Yeah, no, that's awesome dive on that. So when we think of Bitcoin as a stock to flow safe haven asset, then essentially it seems like that has to do with because of the overall scarcity, right? As that goes
Yeah,
up.
well, okay. So to bring back to Bitcoin, um, Bitcoin exists outside of these two crises. Bitcoin, like, there's very few people who are selling their Bitcoin to go buy food, right?
Yeah,
That's just not like, if you look at the on-chain data, that's just not what's going on.
yeah,
It really, the price has been driven by short-term traders, not long-term holders who are preparing with a rainy day fund. So I didn't think that the real economy crisis is applicable to Bitcoin. The financial panic side of things, that has a little more impact because there's overlap between um, hedge funds and traders who are dabbling in traditional financial markets and also in Bitcoin. And
hmm,
so when they need to get dollars, they have to indiscriminately sell any assets that are on their balance sheet, Bitcoin included.
yeah,
And so that's why we saw a couple of weeks ago Bitcoin have a crash down to a little bit below $4,000. But then Bitcoin. So now, first of all, stocks crashed to their 2016 levels, I think,
yeah,
about. Bitcoin crashed above its 2018 low. So already we see that Bitcoin held its value better than stocks,
yeah,
which is really interesting. And then Bitcoin recovered very quickly. So now we're above $6,000. So clearly there's a different dynamic going on for Bitcoin. And Bitcoin exists outside of this paradigm of the inflationary financial system and the COVID-19 crisis, right?
hmm,
Um, and so what in what is Bitcoin's context? It's the stock to flow ratio. And so we've seen that Bitcoin is still sticking within the parameters of the stock to flow and price correlation and co-integration that Plan B discovered last year. Which is really, it highlights something that I've thought for a very long time, which is that Bitcoin is in an endogenous monetization process. So when people try to ascribe um, temporary news items, right, that whatever's going on CNN, and they think that that's what's driving the Bitcoin value, right? The not just the short-term trading price.
yeah,
I think that's very misguided of them.
yeah,
And
yeah.
so Bitcoin's doing its own thing, and it kind of exists outside of this system.
Yeah, I'd love your thoughts. You bring up great points there, and I'd love to get kind of dive deeper into that because, at the beginning of the year there was, a crisis going on in terms with Iran. Like, was the U.S. possibly going to go to war with Iran, and that was supposedly going to drive up price. And there's been all these reasons that why speculators might say that price would go up. And it seems like those things didn't impact it. So, you're kind of touching on that. I'd love your thoughts onto basically the difference between short-term traders and holders in its potential impact on price, not from a predictive aspect of it, but like just the rationale behind why people make those types of assumptions.
Yeah, I think that there's just a general lack of long-term thinking in the economy, right? And so
Yeah.
that manifests itself in Bitcoin as well, um, where you have folks who really their attention span has been shortened by inflation for decades, and then add on top of that, uh, they're getting essentially kind of a denial of service attack performed on them by the media.
Hmm.
A lot of people don't understand that journalists make money from clicks.
Right.
Journalists don't make money from actually, uh, helping people understand the world and uncovering the truth. In
Right.
fact, it's very well known within the profession that those are money losing endeavors, and that investigative journalism doesn't actually bring a lot of clicks, and it's kind of just people, journalists do investigative work, um, out of an idealism,
Yeah,
not
like the
not to
past
make
their own
money.
passion, but
Yeah,
yeah.
exactly, and I applaud that. But for the most part, the journalist industry is very profit driven. It's important to remember that like companies like Washington Post and New York Times, like they're owned by billionaires. They're not public service type organizations, or they're not owned by their readership. They're
Yeah.
not like a co-op or something like that. They are profit driven, and so they rely on clicks, and they're also highly political. And so you have to keep in mind that there's always an agenda behind these organizations, and they're extremely biased. Even the ones that claim to not be biased, in fact, that just reveals how little self-awareness they have, and how far they are willing to go in their dishonesty, that they're actually trying to claim to be non-biased. The
Hmm.
the honest ones acknowledge their biases, right? They're very transparent, and highlight the fact that, hey, look, we don't know everything, and we come to every story with our prior beliefs, and we're going to be upfront about that. Whereas the ones that are trying to say that, hey, we're objective truth, uh, right away that they're lying from that perspective. So
Yeah.
um, when readers expect journalists to actually provide uh, insightful analysis, then they go and trade on that information, and they're surprised that, oh, I lost my money, or oh, something else happened. So to really put a pin on it, in 2013 there was, in early of 2013 in April, there was a run up in Bitcoin's price to $270. And all of the journalists were saying, oh, this is because of the crisis in Cyprus. Cyprus was having a banking crisis,
Yeah.
and they were doing this bail in, and people were getting a haircut on their bank accounts. And the journalists were saying, oh, there's going to be mass adoption of Bitcoin in Cyprus. But they didn't actually know what they were talking about. There was no such thing going on in Cyprus
Hmm.
in terms of Bitcoin adoption. Obviously, there was a banking crisis happening.
Sure, sure.
And really, what was driving Bitcoin's price was that there had been a halving in 2012, and so Bitcoin scarcity had dramatically increased, and that's what was driving the price. So it's really important to ignore journalists in the space who think that they know what's driving the price. I mean, unless they are highlighting the stock to flow ratio, then and highlighting kind of the error margins around that, where
Yeah.
short term Bitcoin's price is driven by human emotion, right?
Yeah.
The bulls and bears, the animal spirits in the marketplace is what driving the short term price. Um, and so when people are panicking about COVID-19, that's going to cause the price to drop. Not any other factor that journalists might be thinking about.
Yeah. No, I think it's interesting. One of the things I appreciate about following you on Twitter is I feel like whenever you provide your Bitcoin analysis, it's in this macro form, right? And whereas sometimes you might see other people and they're just like, buy Bitcoin, buy Bitcoin. It doesn't matter what's going on with Bitcoin. They just keep tweeting like, I'm buying Bitcoin today or buy Bitcoin. So I appreciate your macro view on the system overall and how you
Yeah,
think
'cause
there.
it's really easy to tell someone buy XYZ, right? Whether it's
Yeah,
Tesla stock or Bitcoin or some altcoin. Um, and it has to be underpinned by some fundamentals. Otherwise, it's just a Ponzi scheme.
yeah,
If
yeah,
there are no fundamentals to the price or to the purchase of the asset. And so, yeah, I like highlighting Bitcoin's fundamentals because they're strong and they
yeah.
speak for themselves.
Totally, totally. Yeah, and that's funny because I'm definitely on the Bitcoin side of things, and I'm not as well versed obviously as you, but the way I think about it for myself personally has always been like, whether Bitcoin goes up or down 1,000 points, like it doesn't matter to me because I'm interested in Bitcoin for the long term of it, right? So I care about Bitcoin at 100,000 or as a long term asset for me. So it's fun. Well, and I'm not a trader, right? So perhaps if I was a trader, I would care about the up and down of it, but because I'm into it more for the hodl, the long term aspect of it, it doesn't matter to me on that front. Um, so when going on that on the Bitcoin side of things, there's often like this comparison to gold, right? That you're obviously well aware of, and it seems as though the comparisons are pretty fair, but naturally there's um, call it competition or differences of opinions when people start having that type of conversation, right? You have people like what's his name? What's the guy that's like super gold?
Peter Schiff.
Yeah, Peter Schiff, right? You see, have someone like him who just consistently shits on Bitcoin to like promote gold, and perhaps there's a world in which, hey, maybe gold and Bitcoin. I don't know, but I'd love your thoughts on what you think about one, the comparisons of Bitcoin to gold, and then two, like, do we have to shit on one to like prop up the other, or is there value, to both? I guess.
Yeah, so I think that the comparisons are fair in the sense that you have two scarce assets that are oops that are competing. Um, Now, the problem I think that people get into is that gold is a very mature asset in the
Yeah,
sense that it's been around for millennia, um, and so just from a raw like, okay, which is going to have more upside potential? Potential. Clearly, Bitcoin has more growth ahead of it, and
right.
thus more price appreciation, and thus should just be more interesting. Even if there are scenarios you could imagine where there's an advantage to holding gold versus Bitcoin. For example, if the United States or if any part of the world were to be hit by an electromagnetic pulse, where a terrorist or a terrorist government decided to detonate a nuclear weapon, in the stratosphere and cause all of the electronics to shut down in that area.
Yeah,
Um, Probably rather be holding gold than and guns and ammo
yeah.
than Bitcoin.
Right, and
Um,
that would be like pieces of gold too, right? Because a lot of people, when they think about gold, they still have it in its paper form or digital form, right?
Yeah,
So,
if you own a gold ETF, like that doesn't help you at all. And
yeah,
really, I would argue you want pieces of silver, right? Smaller denominations.
yeah,
Some silver rounds would be helpful there. Because if you hold a gold coin, 1 ounce of gold is like thousands of dollars. 1 ounce of silver is like $20 or something. So that's just a much more reasonable denomination.
yeah,
Um, and then the other part of it that I find interesting to talk about is that gold bugs, like Peter Schiff, will highlight that Bitcoin is not scarce like gold because you can create copies of it. So you can create Bitcoin Cash, you can create
got it.
Bitcoin Gold.
That
you,
the confusion of like the alts basically overall.
Yeah, and the
or commingling them.
dilution,
Yeah.
yeah, the dilution of both forks and alts and the competition in the market for cryptocurrencies as kind of being an argument against Bitcoin's scarcity. And it's a completely plausible argument on its face. The where it falls apart is that it doesn't take into account the differentiation that happens in the market between Bitcoin and its competitors,
Hmm.
um, and what those differentiating processes are. And to me, the most important one is the from a monetary economics perspective, not a software engineering perspective, but really monetary economics, is liquidity.
Hmm.
And Bitcoin has a huge advantage in how much more liquid it is
Right.
than its competitors. And so, someone who wants to enter the Bitcoin market and without moving the price too much, they're gonna they might have like $100 million and they want to buy that much in Bitcoin. um, well, they couldn't do that with Dogecoin, right? That would cause the price of Dogecoin to go up 50% when they enter the market at T0, and then when they exit the market, 6 months later, they would go down 60%. So
Yeah. Yeah.
um, they want a something that has less slippage than that for from a utility perspective. Um, Even if, for example, the transaction fees of on-chain transaction fees, like ultimately they don't care if it's $30 for Bitcoin and a penny for Bitcoin Cash, because the slippage of entering and exiting those positions is much greater than actually the on-chain transaction fee.
Mm.
And that's something that a lot of commentators miss when they're comparing altcoins. So, for example, you'll see XRP marketing say, "Oh, XRP has a much lower cost of transferring than Bitcoin." What they're not including is the total cost of the operation, right? Where
Yeah.
someone has to buy XRP, and then they send the XRP, and then the other person on the other end has to sell the XRP. Um, and so that's where liquidity is really important. And Bitcoin actually has much greater liquidity than any of the other competitors, arguably put together.
Yeah.
Because liquidity is not just what's on the order books and the exchanges. That's kind of the tip of the iceberg that is visible liquidity.
Hmm.
Under the iceberg, you have the order book in everybody's brain, right? And you only see those order books when you see Bitcoin's price crash like $3,800,
Hmm.
and that's where all of this invisible liquidity starts suddenly hitting the exchanges, and you start seeing billions of dollars of volume, and you're like, "Whoa, where did all this money come from?"
Got it. So
Well,
so basically,
yeah.
people holding it on their own, cold wallet or whatever, and then putting it
Well,
into the exchange. Is that what you're referring to? Sorry.
so that's on the sell side liquidity. On the buy side liquidity, you have everyone holding dollars in their bank account.
Sure. Got
Uh,
it.
Everyone that has access to credit, right? So you don't know how many people are willing to go get a home equity line of credit if Bitcoin crashes to $2,000, right?
Hmm.
How many people would really lever up to take advantage of that? And then how many portfolio managers have massive bond portfolios where they would borrow billions of dollars against those portfolios to go buy Bitcoin if there was a real flash crash like that? That's the liquidity we don't see on the order books, is all of this money and credit, all this US dollar and credit on the sidelines that would flood the market if there is actual deep discount on it, due to someone dumping indiscriminately in the marketplace. Um, and so I think that people don't really understand liquidity, because most folks don't understand what a limit order book is, right?
Hmm.
They've got no concept of that, especially when you start looking at kind of the sophistication of proponents of these smaller altcoins. anyway, I won't trash them too much, but yeah.
No, no. I mean, it's fair, and it's interesting too, because one of the MOs of those smaller altcoins have been like, potentially paying people in their altcoin, or having this utility factor of their altcoin. But as you're saying, if there's no liquidity, where that disrupts the overall utility model as well, right? If you can't get your cash out of that. So I totally agree with that. Um, when you start thinking about how a Bitcoin's place in the market, and I appreciate that analysis, in the comparative to gold overall. What do you think it takes for the broader spectrum, or the broader, call it the, humans in general, those of us in Bitcoin or in this space, we like to say like one Bitcoin equals one Bitcoin, right? Like not one Bitcoin equals whatever it is at right now, 6,000 something. So, you know, what I like to say is we need, or we're going to enter a point where companies start demanding Bitcoin, for payment, or they want it on their balance sheet, right? And it's like, and that's, I think, when it becomes really interesting. Do you think we're in a spot right now where, one, a company can demand it? Like, are there the tools in place for them to do that? And then two, from like the social aspect of it, like, what do you think it takes for them to start thinking in that function?
Yeah, so I think that the infrastructure is there, right? They could set up a BTC Pay server instance and start accepting Bitcoin today.
Mm-hmm.
Um, then I think that there's for the company, there's two ways for them to think about it. It's that either the owner of the company is bullish on Bitcoin and wants to accumulate Bitcoin, and they don't want to pay the fees of going on an exchange and buying the Bitcoin.
Mm-hmm.
They can save on the fees by having a source of revenue in their business that they own. So that's one aspect of it. And then the other aspect of it is the employees. So you might have employees that want to be paid in Bitcoin, either because they are not in the same country as the company, right? They might be working remotely, and it might be too difficult to actually pay them in fiat in their country.
Mm-hmm.
Um, um, or they're a supplier, right? And the supplier wants to get paid in Bitcoin. So there's always like a cash flow through companies to either the owner, to employees, or to suppliers. And once upstream they are asking for Bitcoin, then you start seeing a downstream effect where there's increasingly demand for Bitcoin in commerce.
Yeah.
Um, Now, the issue is back to what we were talking about, liquidity. It's always going to be the case that Bitcoin's liquidity, um, as long as the U.S. dollar exists, Bitcoin's primary liquidity is going to be between dollars and Bitcoin, not
Mm-hmm.
between dollars and goods and services. And that's just that's why I see the U.S. dollar as Bitcoin's competitor, not
Yeah.
anything else really.
Right.
Everything else is kind of just doing its own thing. um, and so that's that is the main event.
Yeah.
The two boxers in the ring are the U.S. dollar and Bitcoin. And so at the margin, we will see Bitcoin increasingly used in commerce. There's other advantages too, as well, from the perspective of someone who wants to accumulate Bitcoin. If they receive it as payment for goods and services, they can have better privacy than if they have to go onto an exchange and KYC AML and buy their Bitcoins that way,
Right.
because you don't have to KYC AML for the sale of goods and services. So
Yeah.
there's an advantage in privacy there. Um, and then it's just, there's I like the experience of actually sending and receiving Bitcoin.
Mm-hmm.
There's something really cool about it, and so just that aspect of it, where you're not having to rely on a third party,
Totally.
and you're able to have this sense of sovereignty. I think that as people get a taste of that, and they might start with them like being like, okay, Bitcoin's going to go up in value over the next 4 years. So like that's the way to think about it. They leave their coins on an exchange. To them, it's really a way of just increasing their purchasing power.
Yeah.
But then one day, like they're for whatever reason, they have to send Bitcoin, or they're going to receive Bitcoin from someone else, and then they get a taste of what it's like to actually use the system, and they're like, huh, well, that was kind of hard, but it was also kind of cool. And then they get interested in it, or they get more interested in the technology, and they start reading, Mastering Bitcoin by Andreas Antonopoulos, and they actually dig into how the Bitcoin system actually works. So I think that there's like a natural process where, if you think about like a sales funnel, you've got like the top of the funnel, which to me is like CNBC saying, "Oh, Bitcoin crashed," or "Bitcoin popped today up 60% or whatever," and
Yeah.
that's the top of the sales funnel of bringing in the normies. Is kind of the the dollar, you know, the opposite of one BTC equals one BTC of
Yeah.
one BTC equals 6,000 USD. So that's the top of the sales funnel. And then as they're like, okay, well, I'll just dabble in this as a kind of a very speculative trading aspect of it. That to me is the next layer. It used to be that the next layer was, I'm going to try mining, but there's not really that ability to mine Bitcoin as an amateur anymore. You
Right.
got to like have ASICs, and you got to have a data warehouse, or sorry, a data center to do stuff like that now.
Yeah.
Um, or dabbling in altcoins, right? Where now you can still mine altcoins, and so that might actually still interest people. And then that to me is kind of the next layer. And then after that, either they get wrecked trading, whether it's trading Bitcoin or trading altcoins, and then they kind of become that hodler of last resort. And then maybe they get wrecked by an exchange getting hacked. And then they start going, oh, not your Bitcoin, or sorry, not your keys, not your Bitcoin. Um, and and then they start getting interested in, oh, okay, well, how do I actually become a first class Bitcoin citizen of running my own full node,
Yeah.
and building my own hardware? And then now they're really like geeking out and reaching the pinnacle of Bitcoinism,
Yeah.
and
Totally.
learning how the decentralized system works. But I just see it as a process. And so you have a certain population that is at each stage of the process, and which with each day that goes by, some of them go through the funnel further and further along, and the number of people who are hardcore Bitcoiners is very small, but it's growing every day. Just
Totally.
as the number of people who are speculating on Bitcoin today, I think it's they've estimated that like 8% of Americans own Bitcoin in some form or another,
Hmm.
um, and so I think that top of the funnel number is going to continue to increase, and it's like 80 to 90% of people have heard of Bitcoin. So the absolute top of the funnel there is almost the entire population, and so
Right.
now it's just a matter of pulling people through, and I think that's just a matter of time.
Yeah, yeah, totally. It's super interesting, just the different entry points that people have to come in, and it's super clear that Bitcoin obviously has had the lasting power to get the people that even got wrecked in other places, right? It's like, wait a second, like this is where that goes overall. And I think I've seen you say Kraken actually pays its employees in Bitcoin. Is that correct?
Yeah, so you have the option to receive any percentage of your pay in Bitcoin,
Yeah,
and so obviously your employment contract is in dollars, and then you can save money by directly getting paid in Bitcoin rather than having to get paid in dollars and then go buy Bitcoin on
yeah.
Kraken.
Yeah, that's very cool. That's very cool. Going on to from the exchange point of view, right? So, there's it seems like there's only a handful of trusted exchanges, really out there, Kraken being one of them. And, you brought this up, right? Like not your keys, not your wallet. And you hear about that a lot, right? You hear about different people getting hacked, or, even quote unquote reputable exchanges. Maybe someone got SIM swapped or those sort of things. What are methods that, I mean, is it really just all about that, like not your keys, not your wallet? Are there other things in place that someone should do, or is there a level of trust that will eventually get created within exchanges from, I'm thinking like similar in like the FDIC, which obviously we can debate that part of it too, right? You probably saw that info, or the public
Yeah.
service announcement that was a little scary. But yeah, just kind of curious on that part for call it the layman, right? The person that is getting into it and may make that mistake of keeping it. What kind of things are in place for them?
Yeah, so from Kraken's perspective, Kraken has heavily invested in security, and it's always the top priority uh, i- at Kraken is security. So anytime that we're talking about a new feature or talking about making changes to the platform, security is number one, and that's you know to me that's a no-brainer, and that's why I decided to work at Kraken.
Yeah. Yeah.
It's that is self-evidently the most important thing for an exchange to be emphasizing. Um, and something that I strongly urge, whether you are a Kraken client or a client of any other reputable exchange, you should activate two-factor authentication using a mobile app, not using SMS, not using text message, um, but using Google Authenticator or Authy. Um, and uh, I also strongly urge people to get a YubiKey, some kind of physical. I think it's the standard is called U2F or something like that. But um, Google search YubiKey Kraken, and you'll definitely find resources on that from Kraken.com. Um, because people's accounts don't get compromised if they have a physical key like that.
Hmm.
And the real danger is cybersecurity. It's we can talk about physical security, but you should first lock everything down from a digital perspective because that's where problems happen for the most
Hmm.
part. And so um, and the reason I emphasize the two-factor authentication and the account security at an exchange is that even if you don't hold your Bitcoin at Kraken, and if you're not trading, I actually Kraken and myself strongly urge you to withdraw your Bitcoin in a secure manner to your own private keys. Um, and but even if you are doing that, if someone compromises your account, they could actually still take fiat and make trades. And so um, it's really important to keep that in mind that the it, you got to secure your fiat accounts. Now the other part of it is that on the holding your private key side, you got to be careful about how you do your private key security. Um, it's not unheard of that people accidentally lock themselves out of their Bitcoin
Yeah.
because they kind of went too far in their security. And so that's where I think that if you're not comfortable with it already, you should be doing research to learn about private key management. Um, and that to me is kind of the part of the education process that we were talking about earlier.
Yeah. Do you have some good resources for that, for the private key management? Um, that you know of off the top of your head?
So I'm always hesitant on this because I think that it opens me up to
That's fair. That's totally fair.
criticism if I screw something up. So I think that there are companies in the space that are trying to address this and help people with private key management. So Casa and Unchained Capital, those are good resources to turn to if you're unsure about how to proceed.
Yeah. To look at that. Cool. Well, before we end, I want to touch on what's happening in the world when it comes to COVID-19 coronavirus. Um, I actually tweeted this the other day that my Bitcoin and my blockchain crypto friends basically have been aware of what's been going on with COVID well before anybody else I know, right? And it seems like it's actually been a saving grace for me personally because I've been in my house for the last call it three weeks or so, and thankfully everybody in my household is healthy. But I'd love to kind of get your thoughts on that. Like, why do you think people in crypto have been aware of this for much longer? And I don't know if you feel the same way, but love your thoughts overall. I've also seen like your opinions on on your tweets and so forth with kind of how things have been handled. Like, it's crazy that we've been being told not to wear a mask when it's pretty clear that if you wear a mask, that helps prevent the spread. And so what I've been saying is like, hey, just because there's a global supply chain issue, it doesn't mean that we shouldn't wear masks, right? Like, those are two different problems. So I'd love your thoughts on that overall.
Yeah, I think that there's a selection bias where the people in the crypto community are independent thinkers. So
Hmm.
they're kind of skeptical of whatever the official mainstream media or government is saying, um, and that, for the better or for worse, right?
Yeah.
And so there's I've seen like uh, part of the community be like they're totally skeptical of the whole thing, right? And they don't even think that coronavirus or COVID-19 is a real problem. Um, and then there's the more moderate people, which I would put myself in that camp, who do think it's a serious issue and that it's a big problem, but that, as you mentioned, there are serious gaps in the way that governments are. And health authorities, for that matter, are communicating about COVID-19. And so,
Yeah.
um, for example, very early on in the crisis, um, there there was a lot of medical professionals who were saying that people are overreacting to the news coming out of China, whereas people like Balaji, who was CTO at Coinbase and more recently started Nakamoto.com. Um, I totally forgive Balaji for Nakamoto.com, by the way, after this COVID-19 thing. Uh, and so, they were looking at what was happening in China, and they were able to see that, hey, this is going to spread and it's going to become a problem globally. Whereas health professionals and government officials who are very short-term thinkers were like, oh no, this is a problem in China. Here in the US, it's low risk, right? And they kept saying that it's like low
Yeah.
risk. The bigger risk is the flu, and they were unable to communicate that this is high risk over the coming 6 months, right?
Yeah.
Which would have been the right thing to say, is that
Right.
this is not low risk, this is high risk over the coming 6 months.
Right. Maybe it was low risk at that exact moment in time, but like you're
Yeah.
saying, like over the 6 months exactly. Yeah.
And they would say it's low risk today, but it could become high risk tomorrow. It's like, no, it will become high risk tomorrow. We know that. It's like
Yeah.
saying like uh it's dark at midnight, but the sun could come up. It's like, no, we know the sun's going to come up. You don't need to say, you don't need to qualify that with hypothetical tense to it.
Yeah.
And so what that meant was that Western governments were woefully unprepared,
Yeah.
right? And so now we're seeing massive shortages across kind of the supply chain for responding to this. Um, and people in positions of authority were much busier in January telling people not to panic instead of telling people to prepare aggressively.
Right.
And it would have been much better if we had people, panicking in supermarkets in January, because the virus was not there yet, right?
Yeah.
And so it's okay to have crowds at supermarkets in January. But in March, now it's not okay to have crowds in supermarkets, right? We need to
Right.
have social distancing. And so it's actually a problem that people are panicking now. And it would have been much better if they'd been panicking in January. And so I think that government authorities should actually have been trying to promote panic in January. Um,
Interesting. Yeah.
but they did the opposite, and they were trying to reassure people. And so I think that just really highlights their incompetence more than anything else.
Yeah. 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 It's definitely been a crazy wild time. And it's one of those things where like every day it gets a little bit crazier overall. But it seems as though it's still not under wraps. There's like this wishful, hopeful thinking that it's a couple weeks or a month. And to me it seems like we're we're in this for at least 4 months. If you think about, China's response and how they were, and supposedly they're out of it. We don't know for certain, but supposedly they're out of it. That was 2 months, right? And so, but 2 months, and they locked it down really quickly. In the U.S., we just now locked it down, really, call it this week. So will be interesting to see. Well, Pierre, with that, I'd love to, leave it to you if there's anything you want to leave our listeners with, or kind of any questions you want people to be thinking about as they go about their day.
Yeah, I would encourage everyone to learn how to make your own face mask and learn how to run your own full node.
Nice, I love it. Those are two things that will extend your your existence.
Yeah, exactly.
Awesome. Hey Pierre, thanks so much. What's the best way for people to stay in contact with you, or follow you, or see what you're up to?
Yeah, on Twitter, I'm at Pierre_Rochard. My DMs are open, so if you want to chat there, happy to talk about anything. And yeah, if you are interested in buying Bitcoin, go to Kraken.com and sign up for an account.
Awesome. Well, Pierre, again, thank you so much for your time. Really appreciate it. Hope we get to meet in person sometime soon, hopefully, when all this subsides. And yeah, thank you for your time. We'll talk soon. Everybody listening, appreciate you being here, and make sure that you're following the TF podcast so you can hear this interview and all the awesome ones we're doing lately. We'll talk soon. Thank you, everybody.